Hello and welcome to another update video. Today we want to cover the Nervos network. CKB had a really strong rally most recently. Not the best setup from down here though, but a really strong rally into the into resistance here, into the 78.6 to 88.7 resistance area, Fibonacci resistance area. I want to talk about it. It's what I would consider not a great structure or great setup, because we have a three-wave move up very clearly into the 2021 highs. So that is what I would consider an ABC structure. It has to be. Okay, it has to be because it made even a new low afterwards. So that's an ABC structure. That already would have been a warning that maybe new lows are coming, or certainly nothing super bullish. Then we had a five-wave move to the downside. Honestly, I can interpret that easily as a five-wave move down, possibly as three waves. Okay, that would be, but it doesn't matter because it made a new low anyway. It made a completely new low. So that means we have potentially five waves down, even though what is the wave 2 and the wave 4, they don't really align in terms of, how should I say, proportions. So it makes me wonder, okay, maybe it's an ABC. A, B, C in yellow, which is the bullish interpretation. We talk about bullish and bearish, and I'll let you know my preference. But we have an ABC structure then, and then it would be in the ABC structure to the downside. That, this is a bit ambiguous here, but probably wave 1, wave 2, and then 1, 2, 3, 4, 5 in 3, 4, 5. So I just want to show that it's possible to interpret this as a three-wave move as well, which would support the yellow count, which is the more bullish interpretation. Really, we only need to start the analysis in detail here at the all-time low, basically. That's really where we need to start. Yeah, everything that's on the right-hand side from that line, from that vertical line, because anything before that, it made a new low. We normally need to start any Elliott wave analysis from the all-time low, because it always has a chance to build it from scratch. However, what I cannot ignore is the potential that it formed really five waves down. And at the moment, I only see a three-wave corrective rally. So I see three waves up after five waves down. That definitely keeps the door open for possibly something more bearish. Why not talk about the bearish potential first and the bearish scenario and what needs to happen to invalidate it? I think it's always worth knowing about it from a risk management point of view. It's at the moment, because we're in a bullish market, not my preferred scenario. However, I have to tell you, this is still a very likely option, especially in looking at a chart like that, which made a completely new low in 22. So it's possible that this bearish count plays out. It's a potential. It's not confirmed or anything, but it's a potential. And obviously in analysis, I need to let you know about these potentials and risks, right? As an analyst, my job is to make you aware of the potentials, but also the risks. So looking at this to the upside then, in the white count, which is bearish, obviously we had a five-wave move down, 5 down, okay? And a three-wave move to the upside so far. A wave into the March 23 high, a B wave pullback into the August 23 low, and a C wave to the upside, which is unfolding now. And to be honest, could be topping at any point, because the C wave, if it is a C wave to the upside here, is way overextended. Okay, so what I have here is an A wave up. Then obviously, just from looking at fib levels, I would prefer this as obviously a B wave, because it broke below the 78.6 fib level several times. You see that here, it broke below it and actually sustained a little bit below that 78.6 fib level back then. And that usually indicates, oh, that's not a great setup. It can always work as a 1-2 setup. It wasn't invalidated, but it requires additional proof and caution. But hey, let's assume it's an AB. Then the move up is currently a C wave, in which we had from this August low 23, a small leading diagonal in 5 waves. In wave 1, then a wave 2 pullback. So that's a 1-2 setup there. Not a very clean one, because a leading diagonal is usually not giving us much clarity, but then it completely went, okay? So typically when you have a diagonal pattern like that, regardless of whether it's for a C wave. Because, you know, in a C wave, the next wave after a 1-2 setup is the third wave. And that can be obviously impulsive. So this here would be a leading diagonal. And then even if you are in doubt, okay, the breakout point is typically the top of the wave 1. Okay, so just maybe for the future. And then that's the confirmation that the third wave is unfolding. So that's sort of what I assume, that we had a 1-2 setup. The third wave, okay, the third wave might have topped here. Third wave might have topped here. That was in March, here the 11th of March. And now a pullback has started, which I consider a wave 4. Yeah, so what we're dealing with here is possibly the A wave only. And we could get a B wave bounce, but that's not showing yet. And then a C wave down. The support for this scenario is between one second, just need to shift that to the left here. Support is between 1.5 cents and 0.0085 USD. Yeah, so this is so 0.8 cent basically. This is the support for white wave 4. And then we could get one more high in white wave 5, which would be wave 5 of C of 2. Let me just change the wave degree here. So that just tells us that even in the white count, which is the more bearish interpretation, right, it is possible that as long as this support area is holding, and I mean, nobody knows if support is going to hold, but, you know, we have a lot of wave 4s currently across the market, across the sector. And it seems like also looking at the wave count that it allows for one more high, because if we consider this was a leading diagonal down there in a wave 1, then a wave 2 pullback, then I can count in the third wave also 5 waves as a wave 1, as a wave 2, as a wave 3, 4, 5. And then I had 5 waves up in wave 3. That's actually quite nice to count this scenario here. So if I just do it in white, so 5 waves up, yeah. And even the third wave itself of the third wave was extended, and we have a 1, 2, 3, 4, 5. So it's actually quite nice to count. Counting exercise here. See, 1, 2. You rarely actually get impulses that are so nice to count. But obviously it happens so fast. Yeah. Okay. So yeah. So it takes me to my assumption that the third could be completed, and this is a fourth. Okay. Do we need to go much lower? I mean, no. This is just a support area, not necessarily target. But because what would be the wave 4 here, circle 4, doesn't really have a clean 3-wave structure, I would prefer it to develop that. Okay. And then a wave 5 can still happen. And what is the next resistance area? So obviously we have as next upside target then for the wave 5. First of all, it needs to overcome the most recent high that was formed in March here around 2.5 cents. Next resistances, we have the 88.7 FIB level at 3.13 cents. That's the 88.7 FIB, very important. In that same area, just slightly above that, we have structural resistance. And then obviously here the all-time high, which is at 4.5 cents. So this wave 5, if it's happening within the white count, should really not, well, it shouldn't break above the 78.6 FIB level normally. So that's why I'm leaning not to the white count, but to the yellow one anyway. But if you're thinking, oh, why are you talking about the white count then? Well, the subdivisions are the same. Okay, let me explain that in a minute. But just looking at the fifth wave, I mean, next resistance starts at 3.13 cents. So I would like to see the price obviously get there next. What I cannot do is really give you accurate FIB targets for this wave 5 because the wave 4 is probably not bottomed. But in terms of Fibonacci retracements as resistance, this 3.1 cent level seems to be very relevant. Yeah, and then, okay, then this white count would be full and we could prepare for a move down in the white structure. But there will be a support area for another 4-5 pattern, which is what I prefer, which is a more bullish interpretation. But it's important, I think, to realize that it's a bullish market at the moment. There is a bearish potential on this chart, but it probably will only be realized if the entire market goes a bit bearish. Because if you have a chart with sort of, let's say, balanced probabilities, and I would say it's fairly balanced here, just looking at the chart alone. But if we're in the bullish crypto market, then these charts that have fairly balanced probabilities are probably going to lean more towards the bullish count or bullish option. And we basically, the difference between bullish and bearish here is that in the yellow count, we get another 4-5 pattern. Obviously, in the white count, this is an ABC structure in a wave 2 rally, which, to be honest, could top at any time. Okay, that's why we track support. But if support breaks now, I would argue this was an ABC structure complete, or even WXY, and we've topped in the white count and we break down. That's why we track support. In the yellow count, we have the same support, okay? And we would, however, get after one more high. The subdivisions are obviously the same, you know? The subdivisions are also a 1, a 2, a 3, now the wave 4 and one more high in wave 5. The difference is this wave 5 would complete a larger degree third wave. Then we could still get another wave 4. And by the way, that is the support area. The support area with the solid line is for yellow wave 4, just in case we already topped in wave 3. Yeah, I prefer this is only a pullback in wave 4 of 3, which is this support area. But if we break below this one, the other one becomes relevant. But because they are so close together, I mean, this is 0.85 cent, this is 0.79, so they're very close together. Just want to avoid that anybody sets a stop below this one, and then, you know, this one becomes relevant. But one more high either way would be expected anyway in both scenarios, and then, I mean, it depends on how the market looks then, but probably another 4-5 in the yellow count as well, which can then take us to all-time highs. The problem is I can't really give you all-time high targets because this chart hasn't got an initial 1-2 setup that I can base my analysis on. So once we have these 5 waves up in yellow, then we should get another larger ABC structure in a pullback, which would be a wave 2. Yeah, so like this, 1 and then 2. But the only thing is, are we then still in a bull market? That's going to be the question, right? So if we get 5 clean waves to the upside, then the pullback will be an opportunity. But yeah, we'll see if we are then still in a bull market. Ideally, yes, right? Ideally, yes. So yeah, and really only then we can calculate new all-time high targets. I mean, at the moment, I mean, I gave you the resistance levels. If we just talk about this initial 1-2 setup, I mean, we can project out, you know, next upside. I mean, all-time high Fib, first one is going to be 5.9 cents. And then the 2.786, 3 points. So these are going to be the Fib levels in case an all-time high is formed that are relevant. So we will have 0.59 cents. No, it's 5.9 cents, 7.28, 9.4, and then 15 cents. So they would be relevant to a degree then for wave 5, but we can specify that further once the wave 4s are done. That should give you a comprehensive overview of the CKB chart. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.